Good morning, traders, and welcome to the weekend update and market outlook. I'll tell you up front, this week's going to be a little bit shorter because, quite frankly, it's not going to make a lot of difference what the chart patterns really look like right now with the government shutdown looming. It's really going to be a news-driven cycle this coming week. Now, chart patterns do adhere to news to a certain extent. In other words, if there is a big move, I would expect, for example, a big down move might somewhat come in line in this area right here, where that prior resistance had been. If there's good news, maybe we just pop up a little bit and stay in this general channel. But it's just really difficult to tell right now because everything is going to be so news driven. Looking at SPX, of course, our bullish trend right now is still intact, and we're coming right back into this zone that I predicted we would get back into. We hung around the bottom of it for a while. Now we're getting back up into the middle of it. Ultimately, I think we're going to find ourselves probably back up in this area, assuming that we get something resolved on government shutdown. We can see this very bullish, this huge volume spike when we had this update here. That, of course, is pretty darn bullish. Again, it's going to depend on what government and the news brings to us this week. SPY, of course, looks very similar. It's just 1/10 of SPX. And then the ES, the S&P 500, we can see it's, of course, almost the exact same pattern. We look at volatility overall. Volatility had spiked a little bit, but then it went way off again on Friday. Now, my suspicion is that if we don't get something resolved here before October 1st, we will be looking at a spike in volatility. Now, how much of a spike? I don't know. But I am personally going to sit largely on the sidelines, at least until something along those lines gets resolved, and see which way we tend to go. And of course, I'm talking on my short-term income trades. I'm not talking about long-term buy and hold. That's there for the duration, so to speak. Then we look at the Qs. The Qs have been very hot still. They're pushing the top of that channel, and I would expect them to pull back a little bit, but they also had great volume there. So I would just think that if they pull back a little bit, they're going to pull back into the center line area of that channel, but they're holding up quite strong still. And I think that overall, the Qs tend to be the strongest out there at this point. So again, if there is a pullback of some type, I would expect the Qs to probably experience it a little bit less. Volatility in the Qs also spiked, but also off a bit on Friday. But you can see volatility is still kind of ramping up a little bit there. Each dip in volatility is staying a little bit higher, and I believe that is leading up to this government shutdown news and whatever happens there. If we get a resolution, I would expect that volatility is going to get back down here to prior lows. Hello, Trader Cat. Welcome. She's a little feisty here this morning. I think she's a little nervous about what's happening too. IWM is continuing to look pretty darn strong here. But of all of them, I think if there is some weakness, IWM is probably going to be affected a little bit more than the others because a lot of your banks and all that sort of stuff are kind of rolled into the IWM, the Russell 2000 umbrella, as well as all the small caps. And if they're shut down, I think a lot of times the small caps tend to get hurt a little bit more than some of the larger, particularly tech stocks that rely less on people, more on technology. The volatility in the Russell did drop back to pretty much its all-time lows after spiking a little bit. We can see volatility normally tends to run a little bit in a range, and it's good when we see a spike in volatility that gets to the top of that range. We have some expectations, at least based on history, that the volatility is not going to stay up there. When we have those expectations, that is a good time to put on trades that do rely on a spike in volatility to get better entries into them. A perfect one for that is a broken wing butterfly. So that's when I had higher volatility a week or so ago here. That's one of the trades that I went to. So now looking at GLD, again, gold, I called gold kind of all the way back in here. So if it pulls back to the bottom of this trend line, that's a place I would look to enter. And gold continues to run. If there's a government shutdown, I think gold could run even further. So that is one of the assets that in that type of unsure environment, gold, and more recently, a subject I don't know much about, crypto also tends to historically in the past few years follow what gold does. Anyhow, that's an overview of what's happened this last week. And again, expectations for this week, I don't know. It's going to be news driven. That's really about the best I can say at this point. So with that, I'm going to wrap things up. I'll see you all next weekend. Now, those of you looking to follow up a little more on the alert service, in the alert service closed out 2 more trades this week. These were both diagonal trades. And this one, the Tesla one, was up about 12%. This one was only 5%. However, I want you to notice 0 days in trade. So this one was opened at 6:40 in the morning. I'm in California, so it was open at 6:40 in the morning and it closed at 1:10. So that trade was only open about 6 hours or so and gained 5%. Annually, that would be 1,800% return. You look at this and you say, 5%. That's 5% in a pretty short amount of time. And right now, I am really pleased to announce that I've been trading this live now for about 4.5 months. I'm going to put a link on the screen here for you to go check out the latest stats. But in the alert service, we just hit 12 winners in a row. For me personally, in combine the alert service, my personal trading over the past 4.5 months, I just completed 100 diagonal trades and 94% winners, up about $27,000 and using on average about $2,500 in risk per trade. So that's roughly about 180% return or so over those 4.5 months. That video will give you more details on that. I am launching my class for the diagonal. That video will also give you details on the pre-sale price if you're interested in getting in at a discount. I do expect to have the bulk of the class out probably in about 4 weeks from now, maybe 5, but the class should be out very shortly. At that point, it goes to full price. Right now, it's at a discount. Again, check out that video for more details. Take care.